Today we're talking about things that the bank told you that are probably wrong. What if you go into the bank and the bank tells you that your credit score is too low to get a mortgage? What does this mean? First of all, you need to know that when I ask people on the phone, do you know your credit score? People give me all sorts of numbers. Know that 9 different credit scores exist. Borrowell, Credit Karma, none of those actually are scores we use. They're all consumer scores. Okay? That's the first thing to know, is that it's possible the credit score the bank is quoting you is not something that another bank would use. So it's quite possible you go somewhere else. When I'm asking somebody about their credit score, I always actually ask them what makes your credit so low, and I can kind of deduce, not perfectly, but whether or not this is going to be a doable deal based on that. Now, if your credit score truly is too low, just remember, there's really a couple ways to mitigate that. First of all, if I need to put less than 20% down and I have a low credit score, I can have a cosigner. Depending on how low my credit score is, I may not be able to be involved or use income from what I'm making, but it is possible with a cosigner. If I can achieve a cosigner, putting 20% down is key. 20% down means I can qualify for B loans, which averages about 1 and 1.5% higher rate. Even though I could have been bankrupt yesterday, these are programs that exist at 20% down. It's very locationally specific, so it means that basically when you get a program like that with lower credit, it matters if you're buying in bigger centers like Vancouver or Calgary or Kelowna or any of those types of places over if you're buying in a small town. If I buy in a small town, I could expect to be 25 to 35% down, but maybe I'm paying a higher interest rate. But if you're being told that you can't get more because your credit's too low, what the bank probably told you is probably wrong.